Welcome back to the Noobs Selling Options channel, everyone. Today, we're diving into a brand new explainer. We're going to take a real close-up look at the exact strategies we use to pull cash right out of the market week after week. If you're into structured visual breakdowns of actual live portfolio mechanics, well, you are absolutely in the right place. Let's get to it. So here's our roadmap for today. We'll start with part 1, the premium generation machine. Then part 2, looking at this week's trade positions. Part 3 covers the long-term barbell strategy. And finally, part 4, tonight's IREN tactical play.
Okay, let's dive into this. Section 1, the premium generation machine, and really why we sell options in the first place. I want to pose this fundamental question right out of the gate. For you focused learners out there, you know this is the absolute bedrock of everything we do here. Why are we out here meticulously selling options every single week instead of just, passively buying and holding?
Well, the definitive answer is pretty simple, honestly. We're building an active, relentless cash engine. We sell these options to generate weekly premium. That upfront cash, it isn't just sitting there collecting dust. It's capital we are actively stockpiling so we can purchase other assets, whether that's more stocks or crypto, precisely when the market timing is right. Basically, we're creating our own liquidity on demand.
Moving right along to Section 2, this week's trade positions. Time to bring the receipts.
Let's kick things off with our posture on Circle Internet Group. Check out our covered call at the $79 strike, which expires way out in July 2026. We collected a really solid $1.13 per share in premium on this one. With the stock trading around $73.57, this strike sits safely above the current market value. It gives us great upfront income while still capping our upside at a highly profitable level.
But we didn't just stop there with Circle. To complement that call, we also hold a $72 cash secured put, also expiring in July 2026. We collected an average price of $2.22 on this bad boy. Now, because this put is slightly in the money right now, we're getting paid handsomely to potentially accumulate even more shares at a heavily discounted net effective price of exactly $69.78. Put them together, and these two trades lock the stock in a tight, incredibly profitable range-bound strangle.
And this brilliantly illustrates our strategy on Palantir Technologies, which follows a very similar logic. Take a look at our $118 covered call expiring July 2026. Palantir recently closed right around $112.93. So by setting our strike at $118, we leave ourselves a clear runway for about 4.5% in pure capital appreciation on the underlying shares before they'd ever actually be called away. And for simply granting someone else that right, we pocketed a healthy $1.19 premium right up front. Finally, for our high beta play, take a look at this position on IREN. We're currently short 2 contracts on the $43.50 cash secured put. Right now, IREN is trading up around $47.21, which means these puts are safely out of the money. We collected $1.13 for these, fully leveraging the stock's natural volatility. If the stock does decide to pull back, well, we've guaranteed ourselves a fantastic discounted entry at a net cost basis of $42.37. So, when we bring these 4 long-dated July 2026 contracts together, you can really see a significant cash flow baseline starting to establish itself. By selling that duration, we've generated some serious total premium. And this upfront capital, it dramatically lowers the cost basis of our underlying equities, all while building an incredible moat of deep downside protection against any unexpected market corrections. Let's shift gears a bit. Section 3, the long-term barbell strategy, the underlying theory behind all these trades. Let's quickly define our primary tool here. A covered call is basically a risk-mitigated strategy where you establish a hard ceiling on your upside, and in exchange, you get immediate, high-premium cash flow. I really want to emphasize risk-mitigated here. By utilizing strict covered calls instead of just naked short selling, we completely remove the catastrophic tail risk of a runaway short squeeze. And when you're dealing with the volatile tech names that we trade, that protection is absolutely non-negotiable. Our entire portfolio thesis essentially rests on 3 core pillars that actively monetize implied volatility. First, like we just talked about, is risk-mitigated income via those covered calls. Second is the volatility seller's edge. We specifically target high-conviction, mega-cap, and crypto-adjacent growth equities, think Circle, Palantir, and IREN, because their structurally high volatility pays us much richer premiums. And third, that's our duration edge. By selling long-dated contracts, we capture the maximum absolute premium upfront, feeding directly into that cash engine we talked about earlier. Okay, let's move to and see how this builds into Section 4, tonight's IREN tactical play. Time for some live weekly execution. 53. I want you to keep this exact number in your head. This is the absolutely crucial strike price for tonight's IREN call. Why 53? Well, last week, we were assigned 200 shares of IREN at exactly $53 a share. So now, we have a prime opportunity to immediately put those dormant shares to work. And because of our mechanical commitment to this strategy, it means we're selling the IREN $53 call tonight, regardless of what the premium is. We don't sit around trying to time the intraday tick, and we definitely don't wait for some magical perfect setup. No, we execute. We are turning those assigned shares immediately into cash flow. Let's actually look at the math behind this sharp tactical adjustment. By targeting the short-term weekly option expiring this coming Friday, July 2nd, we exploit maximum front-loaded theta decay. Basically, that means the option loses its time value incredibly fast. Selling 2 contracts against our 200 shares is going to immediately bring in roughly $124 to $154 in gross premium, just based on current bid-ask spreads. That cash injection instantly slashes 62 cents per share off our net cost basis. And since IREN is currently floating around $47.21, the stock would literally need to surge more than 12.2% in just 4 days to even threaten our $53 strike. I mean, that is a massive buffer. So the crucial point is really contrasting the 2 possible outcomes by Friday's close. Let's say scenario A happens. IRN stays below $53. The contracts expire worthless. We keep our 200 shares. We keep 100% of that cash premium. And boom, we open ourselves up to write another call next Monday. But what about scenario B? IRN rallies above $53. In that case, our shares get called away. But because $53 was our assigned price, we achieve a clean 100% scratch on the capital side. We take 0 loss on the shares, and we just walk away capturing the options premium as pure net profit. See? Under either scenario, the portfolio wins. Ultimately, this whole thing boils down to one core philosophy. Repeat the compounding machine. This isn't about hitting one massive, lucky home run trade. No way. It's about the disciplined weekly repetition of extracting premium from the market so we can constantly lower our cost basis and keep accumulating capital. And you know what? That is exactly what we're going to keep doing together on this channel. If you're finding this explainer valuable and you want to track these weekly premiums and live executions with our community, please hit that like button and subscribe to keep following the Noob Selling Options journey. Your support is quite literally what keeps this cash flow engine running. I want to leave you with one final provocative thought. You've seen the methodology, you understand our duration edge, and you see our risk mitigated approach. Based on this specific barbell strategy we've mapped out, which high volatility stock do you think should be our next premium generation target? Let me know your top picks down in the comments below. Thanks so much for hanging out with me on this explainer, and I'll catch you in the next one.